traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Thursday, December 21st, 2017, and this is the Daily Report for gold and silver. Mixed bag in the precious metals markets, with silver trading lower, gold a little bit higher on the day. 1269.90 is putting gold up fractionally on the day, and 1617 current print for silver is putting that metal down by about 10 cents. We have volume really drying up as we get closer to the Christmas holiday. Fractionally unchanged market in the US dollar, 92.83. Dow up 55 points, 24,782. S&P up 5, NASDAQ up 5. Some real action in Bitcoin, with it continuing this dramatic decline after hitting 20,000 per Bitcoin. We have Bitcoin at the CBOE up about $320 today, trading at 15,610. 15,600, a decline of about 1,400. That's according to the CME, and cash market is now going back, or crawling back, closer to 16,000 per Bitcoin. Although today's gains in gold pricing are modest, they are gains nonetheless. And even more importantly than that is how today's price point reflects when we look at the 200-day moving average. Yesterday, prices closed pretty much on target at the 200-day moving average, which currently resides at 1269.50. Today's modest move has taken gold pricing to 1271.70, up about $2.10. It is trading on the high of the day, and more importantly, is trading a couple dollars above the 200-day moving average. As I spoke about in our opening letter, the 200-day moving average is a key level that market technicians look at to ascertain whether or not there contains more bullish or bearish sentiment in a market. A market that is trading above its 200-day moving average is said to be in a bullish mode, and prices below its 200-day moving average is said to be in a bearish mode, which means that except for the first couple of days of December, this is the first time we have seen gold trade back with bullish sentiment since approximately December 5th, when prices broke below the average. So as we get closer to the holiday weekend and the conclusion of 2017, we certainly could see a year-end or a Christmas rally in gold. Now, in terms of our upside targets and our exit strategy, hasn't changed that much. As I said prior to this show, I believe that the 50-day and the 200-day moving averages would provide little resistance for traders in the marketplace. The first real level of resistance that I believe gold pricing could run into is the 50% retracement. Of course, that's a retracement of the $163 rally, and it resides at 1283. But again, I think that that will be fairly minor resistance should gold pricing continue to track higher, ever since having that key reversal or V formation, which occurred on Tuesday and Wednesday of last week. Rather, I would look for resistance to pop into the market at that century mark, which of course resides at $1,300 per ounce. Therefore, traders, my recommendation is to maintain our current long position, to maintain our current stop level, which we will address and trail higher after the Christmas holiday next week. Silver, however, is not maintaining that same upward momentum that we have seen in gold. And as we pointed out yesterday, we did see the first real level of resistance in silver coming in approximately at 633, 634. It is a 61% retracement, and the retracement in silver uses the same timeline that we've been using in gold, a rally from July to September. Now, inasmuch as we did not put out an official recommendation on silver, I am aware that we have a percentage of our subscribers that do trade silver and initiate positions when we initiate them in gold. For those traders, we want to look at an area of support that makes sense. We want to look at this particular bottom here. And of course, $16 per ounce seems to be a level that, should we see some weakness in silver, I would look for this particular price point as a supportive area for current pricing. Which brings us to Bitcoin on the futures exchange. Tremendous pressure continues in this cryptocurrency, in which we have seen the price point go back to the lows that were achieved on its first day of trading, which was a week ago Sunday, when prices began at 15,000 per Bitcoin and then tracked or traded to a high of 18,000, only to drop back below 17,000 a few days later. And that was just preceding the record high price of a single Bitcoin above $20,000 per ounce. Now, we're still plagued with low volume. Today's volume, for example, is 826, and here we've got about 1,600 contracts being traded, that being on yesterday's trading activity, but we still have very mild volume, and I would look for that volume to begin to increase, of course, after the long extended holidays of Christmas as well as New Year's. So the real question becomes, is this current sell-off that we have witnessed over the last week of trading an indication of the end to this dramatic rise? In other words, is the bubble bursting? Or are we looking at a realistic and needed correction because the market has moved up so quickly in such a short period of time? The first thing that we want to do, obviously, is to look at current pricing in the futures as it relates to the cash market. Currently, we have CBOE Bitcoin at 15,320, and this according to Bitstamp, cash market at 15,209. So we're within $100, $150, so they have definitely come into alignment. We also can see that this current price point, in which we have Bitcoin currently trading on the low of the day, is really on a technical basis, because we have to look at cash markets for more historical data. We wouldn't expect any real support if we look at 14,000 per Bitcoin. We still have a couple of lows that come in below that. We could see this market track as low as about 13,500 before finding support and then returning to its upward move. It's obvious that the introduction of Bitcoin Cash has certainly eaten into the demand for Bitcoin as well as Bitcoin futures. As I spoke about in our opening letter, it is certainly getting to feel a lot like Christmas. We've got typical Christmas volume and activity. Coming into the market, volume is decreasing, trading activity is decreasing as traders square positions in front of the long 3-day holiday, and of course with New Year's following next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review.